everyone, welcome to another video by your Tutoring team. I am Whitney, your tutor for today. First of all, let me say Happy Teachers Day to all those wonderful teachers out there who are making a difference, and of course to our team here, our tutors. Happy Teachers Day, everyone. Yes, we're doing our thing, and it takes guts. So yeah, all right. So before I get into today's video, which is part 2 of the Principles of Accounts 2016 paper 1, go ahead, let me just tell you, go ahead and check us out on social media, our Instagram at Tutoring, leave a subscribe, like, comment, share, and all of that. All right, here's our contact information displayed on the screen. All right, let's get into the video. All right, I think this is the right screen. Here we go. So we are continuing from where we left off. So on the 2nd of March 2015, L Land bought goods on credit worth $630. He received a 3% trade discount on this amount. The invoice also stated 2% 20 days, net 30 days. How much would L Land pay for the goods if he pays on the 8th of March 2015? I know it's a mouthful, but you just break it apart, right? Just break it apart and you're good. All right. So remember, in the previous video, I mentioned the difference between a trade discount and a cash discount. It is important for you to know them. Let me just reiterate. The trade discount is that discount you get when you buy goods in large quantities, when you buy it on bulk. And our cash discount is discount that is facilitated by the supplier, for prompt payment, right? So he gets a 3% trade discount on the $630. So you buy a couple of things and you get a little discount because you buy enough things. So you're gonna find 3% of the $630 and subtract it from the $630, right? Because you got a 3%. So it is 3% less, right? And then now, if you realize that the credit term said that he will get a 2% discount if paid within 20 days. This is what it means. Net 30 means otherwise, if you don't pay in 20 days, he has a total of 30 days to settle his debt, and he will then pay at the full price that time. That's what it means. So when I do all of that, so find the 3% of the 630 and subtract it from 630. So 3% of 630 is $18.90. Subtract that from the 630, you get $611.11. Then you find the 2% of the $611.11, which would then be $12.22. Subtract that discount of $12 from the $611.11, and you will get the money that Ellen would pay, which would be $598.88. So your answer is B. Where's my highlighter? All right. Number 17. When money is taken from cash and paid into a bank account, the recording is referred to as a contra entry. Nothing else here, so makes sense. You need to know the contra entry. It's come under cash book, right? Oh, let me highlight this. Let me just highlight the letters going forward. Save some time. All right. All right. The ABC company deposited a check for $300 received from Mr. Murray. How should the transaction be recorded in ABC's book? Remember, we're getting a check from Mr. Murray, right? It's going to affect our bank account, first of all. So cash account, one of in it. Anything with I as it, wrong. So right away, you can just know that and you just select C as your answer. But let's see why C makes sense. Mr. Murray is paying by check. Check affects our bank account. When you change the check, bank, you deal with all of that. We're getting the $300 in our bank account. Bank is an asset. Our asset is increasing. When asset increases, you do a debit entry. So you have to debit a bank account. And Mr. Murray, who was a debtor, he's repaying us now. He's paying off his debt. So it's an asset. the summary as an asset, the debtor is decreasing. Assets decrease, you do a credit entry. So you debit the bank account and you credit the summary. So that's 2 and 3 right away. All right, which of the following is not a nominal account? Remember, in the first video, if you don't remember what nominal account, you can take a look at the first video, part 1 of this, because we looked at it up top. Nominal account, you know, temporary account, like it deals with revenues and expenses, gains and losses, which is not one of those. It would be A, furniture, a furniture asset. Furniture is a real account, right? Assets are real account. All right, number 20, an asset purchased for $1,000 is depreciated at a rate of 10% per annum using the reducing balance method. The book value of the assets at the beginning of the third year is, all right, so what we're saying here is we're gonna use, you remember that thing? We do year 1, year 2, and calculate depreciation, you find the book value. All right, so the cost of the assets is, okay, you know something actually have to work out. Yay. There we go. Okay, great. It's all the working out. The cost of the asset is $1,000, right? So the cost is $1,000. Right. Don't have all of it. So we're finding 10% of the cost, which is gonna be 10% of 1,000, which is 100. We're gonna end up with a book value of how much? When I subtract the depreciation from the cost, we end up with $900. And that's for year 1. So this here is year 1. Year 1. For year 2, it is going to now be the same 10%, the same depreciation percentage of 10%, but this time it's going to be on the new book value amount, which is the $900. So it will be the 10% of the $900. And where did I take it? 90, right? 90. You're going to subtract the 90 right here from the $900. You're subtracting it from the 900 right there. And how much is that equal to? 900 minus $90 supposed to gives you what? 810. So that's the book value at the end of the second year. I don't know, my cursor is not working, but this is 810. So at the end of the second year, the book value is $810. Therefore, it would be the book value at the beginning of the third year. So our answer is $810. This is B. All right. Number 21. A mechanic starts his business with $10,000 worth of tools. What entry should be made to record this transaction? All right. So mechanic is starting off his business with an investment of, by the owner, investment by the owner of $10,000 worth of tools. Therefore, it's capital. Capital is definitely being affected right here. Remember, capital doesn't have to be money only. It's any investment made into the business by its owner. So, and our tools are also increasing because, you know, we have tools been increasing and our capital also been increasing. Tools are assets. So our tools account will be an asset account and it's increasing. So that's a debit entry to our tools account. And our capital is also increasing because the owner is making, you know, investment into the business. So capital increases. Our capital account, when it increases, we do a credit entry. So the answer is the debit your tools account and you credit the capital account, which would be C. All right, moving on. We're at number 22. Goods were sold on credit to John Brown. Which of the following is the correct double entry to record this transaction? All right, John Brown is a debtor because we're selling goods on credit to him. Debtors are assets, and our assets are increasing because we're selling more goods on credit. So you have to do a debit to your debtors account to show an increase in it, right? So debit to John Brown's account. And our sales are also increasing because we're making more sales. Sales is a type of revenue account. Whenever our revenue increases, we have to do a credit entry. So we're going to debit John Brown's account and credit our sales account. Number 23. MK Trucking Company received a check from Mrs. Henry. How must this transaction be recorded in MK Trucking's book? So we as MK Trucking the business there, we're receiving a check. Check affects our bank account. So, you know, right away, I won't be in it because there's nothing here that deals with our cash account. Nothing right here, right? our bank account is being affected and it is increasing. Remember, bank is an asset. When our assets increase, we do a debit entry. So we have to do a debit to our bank account. So definitely part 3 would be in. So the only answers here possible would be A and C, or C. Let's see which one it actually is. Next thing's happening. We're receiving a check from Mrs. Henry. So let Mrs. Henry owed us, like she was a debtor, right? And that account is being decreased. Debtors are assets. When assets decrease, you do a credit entry. So we end up and doing a credit to Mrs. Henry's account. So we do a debit to the bank account and a credit to Mrs. Henry's account, and that's 2 and 3. Oh yeah, it could be A because A did have cash in there. So we rule out all of that with cash already. All right, moving on to number 24. 24. All right, so refer to the following information in this table. What is the value of inventory? You know, inventory is the same thing as stock. They are used interchangeably. All right. What is the value of our inventory? Well, our inventory, what are we going to use first of all? So here are the number of items, invoice price per unit and market price per unit. So we need to know the value of stock. What are we going to use? Are we going to use the invoice price or the market price? The invoice price, the market price would be the price at which, you know, it's sold for in the market, basically. Yes, market price. Yes, right? Price on the market. But not because that's the market price, mean that's the price you'll necessarily get it for. Make it a cheaper cost, a cheaper price, or make it a price above market price, you know? So it's our invoice price that we need to take into consideration, because yeah, this is what we act, the invoice prices reflect the prices that we are actually paying, right? The charges to us, right? Our actual charges. So you just multiply the number of items by the respective invoice price per unit to get, you know, the total. And you just do that and add them. So 100 times 60, 80 times 100, 50 times 84, 75 times 84. And then you add the total of that. You're supposed to get D, $24,500. Number 25, an increase in drawings will result in, if you watched part 1 of this video, then you don't even need me to answer the question here. You'll be shouting it out at the screen already. When drawings increase, our capital is being decreased, because as I said in the previous video, drawings decreases our capital account, right? Remember, drawings is when the owner of the business withdraws money, or, you know, any asset at all, assets from the business, really, resources from the business for his or her personal use, right? All right, number 26. So we're given this information, and number 26 is asking us for the working capital. What is the working capital? What's the formula for working capital? It is our current assets, right, minus our current liabilities. And I would advise you to please know about working capital, know what it is, know how to find it, and know how to show it on your balance sheet. Because I've seen questions where CSEC is asking you to draft a balance sheet and identify, make sure you state clearly where the working capital is. You need to know that, or they might give you a little short answer after you do the balance sheet. You know, they might ask you what's another name for working capital. Another name for working capital is what? Not net current assets, right? Or also known as net working capital. All right. So your working capital is really the amount of money available that a company can use readily for day-to-day operations. So do your current assets, which is $25,000, minus your current liabilities of $5,000, you end up with $2,000 working capital. All right, moving on to number 27. If $2,000 worth of stock is sold on credit at cost, what would be the new working capital? So the $2,000 would come from the stock. The stock would reduce to $2,000, right? And then because it is sold on credit, that means our debtors amount is increasing by 2,000. So you just basically move the 2,000 from stock and you put it where debtors is. So debtors now become 8,000. So this figure right here, the 25,000, which is your total current assets figure, it won't change because either it just move around $2,000, but it still fell under the current asset section. You move it from one current asset to the next. Your total current assets don't change. So your working capital don't change. This is the same 25,000 minus the 5,000, which is still 20,000. Number 28. During the year, a company bought stationery for $220 and used $120 worth of it. What is the expenditure for stationery that will be posted to the profit and loss account? All right. Stationery. When we're buying stationery supplies, for example, right? That's an asset. So when we're just buying it, the double entry would be you debit your stationery account. So let's say we're buying supplies as a stationery, you debit that account and you credit with a cash or bank if you paid for it upfront, or your credit account payable if you bought it on credit. However, when that is used up, right? When I use up some of those stationery, it now becomes an expense. So the $120 worth that you use is now an expense, and we know that expense is going up profit and loss account. So the answer is B. So when you use the stationery, you're going to debit the expense account and credit the stationery account. So it becomes an expense when you use it up. Cool. 29. A trader started with capital of 20,000 in the bank. If 12,000 of it was used to purchase building and plant, the balance of $8,000 would be, cannot be drawings, cannot be total assets, cannot be current liabilities, definitely working capital. And as I just mentioned up top, what working capital is, it's the amount of money that we have available in the business, right? That we can use readily for like our day-to-day operations. And how do we get it? It's our current assets minus current liabilities. And the last question we'll be looking at is number 30. Number 30. So the formula for working capital, look at that. I just said it. Answer this one, guys. I literally just said it. If you say anything other than D, yeah, no, it's D. All right. Yes. So that's it for today's session. I hope you learned something. You can remember, leave a comments down below. Let me know if you didn't understand something. Here's our contact information. Reach out to us. Sign up for your tutoring journey today, right? If you want to request some other videos on a specific topic or something, you can go ahead and do all of that. You weren't clear about how we got one of the answers, leave it in the comments, reach out to us, Instagram, email, WhatsApp, whichever way. And don't forget to subscribe. Again, happy Teachers Day, and I will see you guys. Well, bye guys. I will see you next time. Yes. Bye bye.